good day. Tea with Travis and coffee. It's been a long morning, anticipating all the big announcements coming out. 4 big topics on plate today with the economy. Actually 5 if you count the Dow's reaction to these 4. But basically right now the Dow's down 380, which is obviously almost 5% of the Dow right now. And mortgage-backed securities are actually faring pretty well. They're about 25 basis points up. They're in a trading range of about 18 to 35. What that means is, in addition to yesterday's gain of 38 basis points, that's about 5/8 better in fee on your mortgage rate. So this is great news for mortgage rates. It knocks off about half of the losses we've seen since January 1st, and it's going to allow investors to finally catch up and start offering the rates that are truly out there for us that we should be getting in the upper 4% range, not the 5s we've been seeing, as this whole supply and demand issue continues to rear its head. But what is interesting is, first this morning, the first announcement at 8 o'clock our time here in the Pacific Coast was Timothy Geithner, new Secretary of Treasury, was announced his comments about TARP II, which is the Troubled Assets Relief Program 2. It's the first one wasn't quite as effective. This is the revamped version, as well as talking about this, which is basically the bad bank. It's taking troubled assets or troubled mortgage-backed securities from these big bond holders and taking them on their back and selling them back on the secondary market once they're really deciphered what's in those packages. Because the problem is about 90% of those bundles are great mortgages, and 10% are failing or underperforming. And so if you buy a bundle, and let's say a $10 billion bundle, then you're going to have a huge percentage that still perform very well. So that's part of this thing going on. What happened, though, was when he made these announcements, it really gave no clarity or certainty in how much they're going to help these banks or the financial markets that are traded with, Bank of America's and the big conglomerates that have the financial impacts. And so, since that uncertainty, his statements were very vague, and there's some hoops to have to jump through, some stress tests for these banks to be able to even tap into these funds the government's offering in this TARP II. And so it didn't really give traders a boost of confidence because there's real no clarity, and it's pretty much clear as mud right now. So the stock market's really been impacted. The good news is, though, that it's pushed money into bonds because there's that safety in the Treasury and the safety in the bonds that the government's issuing, and not the uncertainty in the financial markets that are not privatized or not public offered or public companies. The second note is the congressional vote. The stimulus package did pass. It passed 61 to 37 on an $838 billion plan. And so that should have been good news to the stock market, but the Treasury's kind of trumped the passing of the stimulus bill by his vague comments and how the banks are going to be assisted. And that's the big problem right now in the stock market is it's just uncertainty. They don't know if they should reinvest in the financial sector, if they should be confident in the stock market now. But everybody's confident in bonds, so it's a great news for bonds and us in the mortgage business and those of you that want to refinance or purchase right now. Third, Ben Bernanke has been in front of the House Banking Committee this morning and has been testifying. He's been getting grilled. I've been watching that on MSNBC, as well as now the Treasury Secretary Geithner is speaking to the Senate right now about his comments made to the public earlier. So a lot of things going on. Words have a lot of meaning right now in the market, and they're reacting accordingly. And finally, oil is down again at below $40 a barrel, which is great for us at the pumps. OPEC has made the statement if it continues to close below $40 a barrel, they're going to slow production. So that's bad news, but as long as we hover in that area, I think we're still going to have great gas pumps for a while and no real fear of inflation. Right now, inflationary pressures are pretty much nil, and deflation is the concern. What happens in deflation is people basically stop spending, waiting for a better deal, thinking that prices will continue to drop or places will go out of business and have to do slashed, reduced prices and those type of things. So they're trying to fight that whole deflationary issue. All in all, $1.5 trillion is what we're talking. If you combine the Treasury, the Fed, and the stimulus plan, it's about $1.5 trillion in assistance, I guess you could say, into the market. So, gosh, if that doesn't help, I don't know what's going to help. But right now, it's just all the technical factors in the world support buying and refinancing. There's a great program I'll discuss in a later video about Fannie Mae's new program called DU Refi Plus program. It's going to have a lot of the hair attached to the guidelines now will go away, which will free up a lot of us to be able to refinance. So that's great news. That's a long update, but there's so much going on. I wanted to keep you abreast of what's going on. So have a great day. Call us if you have any questions, and be blessed.